So good morning, active traders, and welcome to our Trading Week Ahead broadcast for today, Saturday, September the 25th, 2021. Fall's upon us, and our September sell-off was short-lived, at least for now. It bounced off the 100 SMA, right? We had a really strong sell profile here, and we had the really red Monday, and then the market kind of bounced the last couple of weeks. I'm still not going to be doing any aggressive swing trading unless we take out new all-time highs over that 45.50. The reason being we're still in a very hesitant, iffy, we don't know what's going to happen next mode in the market. So I'm in a few swing trade positions, but very light size. Right now is a really good time to be doing intraday trading or more conservative, easier approach. Potentially easier approach is what I call intraday swing trading. And that's basically where you put the trade on in the morning, say between 9:30 and 10 o'clock, put a hard stop right under support, and then just let it go all day and then close out the trade toward the end of the day. Or that can be a really good start of a swing trade if it ends the day up at a 2-day high. So you don't have to do hit and run day trading 5 and 10 minutes at a time. You don't have to do long, drawn out 3-week or 4-week swing trades. You can do a kind of a hybrid approach where you're doing intraday swings. And that's one thing we cover in the live room. Been doing that for years. Anyway, broad market profile, we had a really strong sell pressure here. Dropped down on Monday, bounced back up here sharply the last few days, but we're still in a technical downtrend unless we take out that 45.50 resistance level. So I will be getting back into swing trading more aggressively, like I've been doing so well, if we get back over 4550 for a minimum of 3 days. You often get a head fake at a 52-week high or a 52-week low, and it pivots back in because of institutional trade. Hedge fund traders, how they manage their order flow. It may, head fake on the upside. So I'm not going to jump back in the minute the market takes out new highs. I'm going to patiently wait, be a little more conservative and gradual, and make sure it holds resistance, it holds above resistance over the 45.50 for a minimum of 3 days. Oftentimes we've seen, you've seen these pullbacks that go for a few days and then reverse up. We may see the same thing with the false breakout. So that's tip number one. Tip number one is don't jump into swing trading the instant the market runs right up over the resistance area. Be a little more cautious, If we take a look at our VIX, you can see we're back down here. Where do we close? Right under 18. So like I mentioned to you folks, 20 is a key resistance level for long versus short buys. If we get back over 20, obviously we got increased volatility, and the market's likely to drop. So as long as we stay under 18 or 20, we may see the rally continue. So those are two things to pay attention to: is where do we trade Monday, Tuesday, Wednesday relative to the current trading range, and what does the VIX do in terms of pop or drop? And anything's possible in this market. Now, one thing I want us to start by looking at, I always like to do a quick heads up on commodities with oil and gold. Energy's been hot, so oil's been good. Gold, not so much. This is GDX, and you can see we're at a 52-week low. So the way to trade against that is with DUST, the inverse gold ETF. It does the exact opposite of gold. It may be hard to see on that. So GDX has been down, DUST has been up. Okay, and similarly with oil, you can see oil's been going up. This is UCO, one of many oil plays. You can play many. What I like to trade, I was trading, I like Occidental Petroleum, it's a good one for oil. And there's ConocoPhillips, there's Marathon Oil's another favorite I've traded for years, MRO. So if you want to play oil, you can do Exxon and Chevron and whatnot, or you can play the more affordable OXY and MRO on any pivots. Let's take a look at a few swing trading charts and see where we're at relative to last week and see if they've held up. This is one of my favorite ones, NAVI, and you can see why. It's been holding a good continuous uptrend month after month. And those are the kind of charts you want to scale into, or position size. Now, if you're building a position and we lose a key support level, like a 50 SMA or whatnot, sell it, right? Or use a tight trailing stop. we're just going to eyeball some of the earlier charts. Now, Costco had a good day yesterday, right? If we zoom in on that one, you can see Costco did 454 to 468, so nice $14 run. You could have made some money trading this, right? And this is what I call an intraday swing trading approach. The trick is, and I teach this how in my live room, so if you're not yet a member of my Trading Open live room, you might want to consider we put in a long right above the 2-day high. So you go along right above the 2-day high, you put a stop loss right under, at lowest would be the pre-market low. I usually use 50 or 70 cents under support, and then just keep your eyes shut, come back at the end of the day, and either you made a lot of money or you got stopped out. So it's an easier kind of set it and forget away. You can also use conditional orders. One triggers the other with trailing stops or hard stops as well. So, but anyway, that's a favorite strategy of mine is intraday swing trading. Because if you're like most traders, we have a challenge trying to navigate the ups and downs. Now, I've made some money trading Carnival Cruise Lines back on Thursday, but it kind of whipsaw here Friday. This is a good example. I call the long for members on the pivot. But it's very difficult to navigate the ups and downs intraday, right? Because the things whipsaw up and down. One alternate way to do it is just put on the trade early in the morning, come back, put a hard stop underneath support, then come back. Kind of like putting a cake in the, not that I ever bake in 30 years or something, but you put a cake in the oven, you come back half an hour later, and hopefully it looks good. Same thing, you don't have to babysit the position all day long. You just put on the trade. One of my smart traders, Mick, had mentioned Range Resources yesterday. Good call. Anyway, you put on the trade right above the previous day's high, then just close your eyes and come back at the end of the day. And put a hard stop down here, of course, and then come back at the end of the day. Either you got stopped out, or you got some money, or maybe break even. But that's a good low stress way to day trade. This is another pick from Mick, and I'd call the long here. What did I call it for traders? Let's see, AEHR, the long call is 1420. Yeah, that's when it was down here. I said, hey, that looks like it's going to bounce. Now, again, you cannot navigate the ups and down, the sawtooth, sawtooth up and down pattern. Forget about it. I've been doing that over 20 years. Just don't try it. Just give up on trying to navigate the ups and downs. Put on the trade, make it easy for yourself, And this is especially good if, like me, you're getting older. I'm getting close to 60 years old now. I'm 57. I'll be 58 in January. Anyway, put on the trade early in the morning. Put a hard stop right under a logical support level. Let it shake and bake all day long and come back at 334 and cash and ring the register, right? That's all you got to do. Try and make it as easy as possible. And I give you guys the answer key each day with the right charts to trade, where to enter, and where to exit if you're looking for trade setups. So back to our swing trading charts here. What a run. Some of you intelligent people had asked about these last week or the week before, and they've done really good, especially AVTR. I don't even know what the name of the company is. I just trade things. I don't care what the names of the company. I'm not an investor. But now I'm curious, what is AVTR? Aventor Inc. That information is completely worthless. The title of the company, we don't care. We don't need the title. All we care about is price action, making money, minimizing risk, and making this as conservative, as easy, as step-by-step as possible. Now, you good folks mentioned all these tickers a minute ago. We're going to take a look at those in just a minute, but before we do, I wanted to take a look at some of the intraday charts. See where they're going. Now, how about that Zevo, right? I called it short here at pre-market, but anyway, ran all the way from 4 to 7, pulled back down. Now, this is what's called a mean reversion pattern, where it goes up. So this is on my radar for Monday. I'll trade this. I'll hit it. If it opens under 6, I'll buy over 620. It runs up, pulls back down to around half, and often bounces. A 1, 2, 3. As easy as 1, 2, 3. Mean reversion pivot. That's where it runs up. Mean reversion, the mean meaning X bar average, reversion meaning pullback. Just a fancy way that the technicians say a 50% pullback. Something runs up, it pulls back down, and then it often bounces. Kind of like a basketball bouncing off a court. So anyway, those type of charts have good setups. This one was really good. I traded this several times yesterday, QS, and I like this one because they ran all the way from 26 to just under 29 whole number. Another thing that you'll learn as a member of my live room is using very easy to understand, very simple, very clear, very direct, very step-by-step entries and exits using whole numbers as support and resistance, in addition to the previous day's high and low and open and close. So you have 26 support, 29 resistance, throw darts at it on the way up, and you can work with it. Wow, big turnout this morning. Good to see so many of you here on a Saturday morning. You're to be commended for your dedication. Instead of sleeping in bed or fooling around or whatever, you're here to learn. So good to see you guys here. Carnival is one of the meme stocks that's been especially strong. I like Delta and some of the other Delta Airlines and GameStop, and you had so many plays moving up and down. Carnival is especially good, and I think I saw a title. I didn't watch it, but I guess the CEO of the company was saying they're expecting lots of return. Anyway, the main thing is price action, and all we care about is money. So previous day's highs there, you put on the trade there, you get faked out, you get back in, and boom. Now, how many of you have ever been, whenever I do Money Show presentations, and I am scheduled to speak for my friends at Money Show on Wednesday, October 6th at 2 right before 3 o'clock. So Wednesday, October 6th, pencil that date in. I'll be speaking for Money Show as one of their featured speakers as usual. Whenever I speak for Money Show, I always, back when I was doing the live sessions in Vegas and New York and all that, I'd say, how many of you, show of hands, have been directionally correct? You thought it was going to go up and you put on the trade. You got stopped out and then it kept running on up without you. You're thinking it was going to go up was correct, but not until after you got shaken out. That happens all the time, and that's one of the biggest challenges that we face as active traders, is managing the fake outs, but still profiting from our correct assessment that the instrument was going to go up. So try 2 or 3 times is my answer, up to 3 times. 3 strikes and you're out, but do give things a second chance. Like, let's say you bought here, you got stopped out there. You bought here, okay, now you made some money. That's good. If you just got here and stopped out and given up, it's very disappointing if you see something run up without you. You knew it was going to go up, but not until after you got shaken out. So I teach how to dodge those bullets in the live room at Trading the Open. So if you're not yet a member, do give that some thought. Range Resources, a nice directional runner. One of my traders, Mick, had mentioned that one. AEHR was really good for a pivot. And GOEV was nice. And again, I'm the go-to guy for the reason I get the call. I get so many traders working with me is we do not like the whole idea of trading cheap stocks with thousands of shares and playing it like a video game and throwing darts at it and being too hectic and too frantic and all the rest of it, especially if you're older like me. I mean, maybe if you're in your teens or in your college years, you can play the market like a video game. But for the rest of us, we're maybe a little bit slower. So I think putting on the trade early in the morning, putting the hard stop under support, letting the shake and bake all day, and then coming back at the end of the day to cash in your trade is a much easier way than the frantic, thousands of shares in and out with hotkeys and all that kind of stuff. So, and if you're a young kid, maybe that competitors would be good for you. If you're an intelligent, older, more conservative individual, like in your middle years or your older years like myself, it's easier to day trade with that hybrid approach where you're doing intraday swings. The trick is never, ever, ever, ever trade something that's inside the previous day's range. That's usually a really bad idea. That usually ends badly. I know I've done that thousands of times. It almost, I would say 2/3, 3/4 of the time. And the reason is institutional trading, high frequency trading, money that comes into things that trigger the equations. And I know all that stuff because I used to have market makers come to my seminars. Money flows on outside days and outside charts, meaning outside the previous day's range. For proof, go back and take a look at, say, your last 10 or 20 trades and see for yourself where the stop outs occurred versus the occasional wins. And you'll almost certainly find that when you entered something when it was inside the previous day's range, you got stopped out or shaken out. On the other hand, if you enter above the prior day's high, let it ride, those usually work out. So instead of trying to navigate this, and good luck, even I've been doing this full time for over 2 decades, I would get stopped out. I guarantee it. Well, I might make some wins and some small, but wouldn't make much money trying to navigate this ridiculous up and down chop that we see in our stock charts, right? So much more intelligent approach, I think, is to simply buy above the previous day's high, let it go all day, and then cash in at the end of the day. I just saw that just off the top of my head that it would have validated the correct approach. If you try to navigate this, you not only would have made smaller profit, even if you happen to exactly time the pivot switch, good luck with that, not much range. So that would not have been a good place to try and live, as a lot of traders do on the open. What you want to do is put the trade on in the open, come back at the end of the day, cash it in. Okay, that's a very intelligent approach. Let's see. Oh, thanks, Trey. Appreciate that. Now, let's see what else. Wow, a lot of charts. Okay, for day trade, someone is asking. We're going to take a look at all these charts in just a minute, but AOSL, no. Another rule of thumb is to avoid these, the disreputable chat rooms that do front running, which is where they like the guy who runs the chat room will buy a lot of shares, and then he says, "Hey, everybody, it's going to the moon." Then unfortunately for them, their subscribers buy, and the guy's selling to them on the way up, and they all get stopped out. Or that trick only works with low volume, low float instruments. So if you ever see a chat room operator advocating under $10 stocks that are on low float with low volume, run, don't walk away, because it's a dishonest person that will almost certainly get in trouble with the FTC, if not go to jail. So these kind of charts, this kind of chart would be terrible because the volume is too low. You may be asking yourself, well, what's the threshold? For 20 years, I've told traders 15,000 or 20,000 shares or more per minute is the minimum volume criteria that I cover in my live room, and that I advocate that you do as well. So never ever trade something like this with low volume, because this has only, say, 2,000 shares. Some guy running a chat room could say it's going to the moon, and if he has a few hundred subscribers, and then they can artificially move the price up if it's a thinly traded instrument. That's the dishonest chat room operators cover those kind of things. Honest people, we like things that have lots of volume, they're well-known, or if it's an unknown stock, at least make sure the volume's at least 15, 20,000 shares per minute. That's really important. Let's see, someone else is asking. Oh, thanks, I appreciate it. Hey, Matthew, how much volume per day is good? At least 1 million. 1 million shares, and that's a smart question too. For swing trades too, I like things that are liquid, because it's easy to, traders vote with volume. So if it's thinly traded, you don't want to trade it. If it's got at least 1 million shares on the daily chart, which we'll now switch gears and look at, or 15,000 shares per minute on the intraday, that's good. All right, so here's your folks' picks. Hit me up with your other charts. If for all of you, wow, big turnout. More people than I expected. It's a epic number of people. Type in 1 or 2 tickers of a stock you'd like me to pull up now for swing or day trades, and we'll take a look. If it's for day trading, let me know it's day trading. Otherwise, we'll assume it's swings. So Cabot Oil and Gold looks good. ConocoPhillips looks good. Occidental Petroleum is okay. Marathon Oil is okay as well. Now, one thing that Trader had mentioned, this INOD, this is a really good chart because volume is high and price is high. And this illustrates what I call a volume spike, or price action / volume spike. When you see an increase in volume and price action supports it, that's usually a really good setup. Now, again, we never buy right under whole numbers, because anyone who'd been long from 8 or 8.5 would be thrilled to sell the people up at just under the 10. So where would be a long entry for a swing trade for this particular chart? For those of you who've been with me for so many years, thank you. You probably know the answer, but the place not to buy would be, say, 9.9, because you never buy right under whole numbers, because that's exit targets for everyone else. So they're selling to you And that's why they fall down right under whole numbers. Just like here, right? This same thing right under the 10 and pulled way down to 6, or 6, 7. Right, somewhere over 1020. Yeah, exactly. Yeah, Mira got it right again. 1020 is the correct answer. 10.2 would be the correct place to enter. It'd be preferable to see a pullback right under the 10 and then a resumption of the trend over the 1020. So that makes sense. So good job again, Mira. But I like this. And if you look on the day trading chart, no doubt it's good too. This would not be suitable for day trading because the volume's too thin, but for swing trading, sure thing. See, Disney, the Magic Kingdom looks like not so magic right now, so no. I'd short the 165. And this is not trading advice or recommendations. It's all for educational information use only. By watching this, you agree to not make actual trades. Just learn the patterns. How about Apple? Looks like the market's taking a bite out of that. That looks just as bad as, I'm sorry, here's Apple. Took a bite out of it during this pullback here. Not as bad as Disney. Still in a technical uptrend. The earliest prior resistance level that it traded at, we're just slowly climbing back above it. But on this chart, I would not trade Apple until it takes out new highs over north of the 160. So we'll leave Apple alone for now because the price action momentum just isn't quite strong enough. Moderna looks fantastic. I love that chart. That's good. Pullback Friday, but it looks good. I would actually get in sooner rather than later. Personally, not a trade recommendation. I'd get in right over the, I wouldn't wait for the 500. I'd get in right back over, say, 465 or so, right above this prior high here. So that looks to be around 465. Right above that bullish cup pattern makes sense. And then you could scale in over, say, the 510, 520. But it did such a nice swoop, right from 60 to almost 500, 460, 500. This also illustrates a key idea when you're swing trading. A lot of traders don't know how to exit their trades profitably. My answer is when in doubt, get out. Cash is king. And the way to do that is to look for key support and resistance levels that everyone else is likely to look at. So 500, an obvious kind of psychological brick wall that people would sell into. You don't buy right under, like if you're trading something that's, you know, under $100, you don't buy at 98 or 99. You wait for it to get over the 100 before you go in. So, yeah, really good chart. I like Moderna. That's a good one. That one will play. T-Tech also looks great. I like this chart for a continuous move up. We've got to run out all the way since summer. This guy's been on a nice rip to the upside, moderate pullbacks, but it looks good north of 155. That one looks even better, HLI. Hotel Lima Indigo. You can see it's gone from 64 to 96. Now again, where would you buy this? Remember what I said, buying right under 100 would be a really bad idea. I mean, you might get lucky, but I'm not in it to get lucky. The reason why my live room is so popular at Trading the Open, you can go to trademastery.com/live, or just type in tradingtheopen.com. I'll take you to the site. Is I teach these things for both swing and day traders. So the earliest we'd get in would be, yeah, somewhere north of 100, 100 and a half, or 101, 102. So HLI looks good. IPG, fantastic chart. Same thinking. We don't, and I've never said this chart before in my life, at least not in recent history. IPG is a wonderful chart. This would be a good place to tighten up a trailing stop to say 38 or so. We would never buy right now because it's right at 39. So I would instead wait for it to get over 40. And the preferred setup would be a little false breakout to say 40 and a half, maybe 41, a pullback, and then a resumption of the trend. You buy above that, whatever that false breakout high was. So maybe 41 and a half or 42. But we don't buy right here. This would be a good place to tighten in a trailing stop. This is a good place to sell into. It wouldn't be a good place to buy unless it breaks and holds over the 40. But yeah, that's a wonderful chart. That's probably the best one so far today. I like. I'll probably trade that myself, so thanks. So like, note to self, that one's worth trading. All right. How about old Salesforce? Nice big thrust up on Thursday and Friday. If you take a look at the intraday chart, you can see wonderful chart. I love that chart. That's great. Salesforce is a go, right? I'm sold. Salesforce, that'd be good for day or swing trade, in fact. So that's good. The range is good from 260 to 286. So $26 range on a 200-ish instrument. I prefer charts myself that are $40 and lower, like $15 to $40. That's my specialty. But this is a great chart. Have at it. I would buy any new high, 288. Then, especially if it breaks the 300 later. But it's a good chart. Really good outstanding run in Salesforce. PLTR, nice emerging long. Again, we don't buy right under the decade value, but if it gets over that 30, it looks good. Let's see, this is kind of a downtrending bottom fisher. It's gotten some buyers lately. If you take a look at the intraday, you can see that looks healthy, somewhere north of 12 for NKLA, like 1220. Wow, that's a good chart. IT, perfect. Big run from 100 to 300. Think about how much money we could have made if we bought down here and got up there. Unfortunately, we don't have time machines and we can't go in the past. But what we can do is look forward and make intelligent, well-reasoned decisions based on price action, volume, and the chart pattern. And again, 45-degree angles are the best ones to play. And this has that in spades. So IT looks great. Delta Airlines going to reopen and play. I like this better for intraday than for swing trades. If you look at the day trading chart, you can see it's got really good pin action. Okay, pretty good for intraday. Not a great chart though. Sophie was good for day trading though, especially a day before yesterday. That was a good day there. This was Wednesday, Thursday, chop sideways, and then Friday. This illustrates another pattern, that kind of a gotcha pattern, or something that used to get me all the time. And I teach how to dodge charts that should not be traded. The rule of thumb is after a big day, you expect, like a big gap, you expect a quiet day. It's not really tradable. And so the challenge is, you may see a really good run up one day and then be tempted to trade that same stock the very next day. That's usually not a good idea. If something has a really big extended run, it's kind of like exercising and then resting. So you get a big move one day and then a quiet move, not tradable the day after. Just like after a big gap, the day after something gaps is usually a terrible day to trade. 2 days or 3 days after the gap, have at it. And like this, 2 days after the big move, sure enough, we had a repeat of about the same, almost the same range. So it's on again, off again, on again. So it's a very binary. You have big ranges, compressed ranges, big range. So you trade, odds are you'll miss the first day. The trick is be smart enough to avoid the second day, but be keen to trade it on day 3 or day 4 of that run. So yeah, Sophie was good. And ConocoPhillips looks great too. On the day trading chart, actually that's worth day trading too. I may trade that myself on Monday, so I'll put that in the watch list here for us. Thanks. Daily looks great too. I like this anywhere with a 6.6. So you folks came up with some really good charts on balance. So really good work. Well done. And I hope that I can be part of, to facilitate your progress. I've been doing trades for over 21 years now, tens of thousands of live real money trades. In the live room, I like to cover both kind of a more slower swing trading approach for you that can really help in addition to your intraday trades. So let me see where my live room is Trading Open. I still have the domain. You can type in tradingopen.com and that will take you to the live room page, or you can go to trademastery.com/live. You got so many good charts to work with, right? Half the battle is finding what the heck's worth trading. And if you're like so many thousands of traders I've worked with over the last 20 odd years, You don't have time to go scan through all the charts. That's what I do. I'm usually up at 4 in the morning here in Colorado, my time, hours before the market opens, scanning through all the different resources I have to narrow the list to 5 or 6 charts that are good for day or swing trades, and then answer members' questions. We always have really smart traders in the room, and they often give me charts that are even better than the ones that I find. So as a team, as a community of like-minded traders, we work together. And I hope that I can be a support to you as you join me in the live room. So I think that's about, wow, lots of charts. Let's see, lots of questions. Let's see, Navi, where would I buy? Well, first of all, would I buy? Let's take a look. Well, actually, I think that's already in the list, right? Yeah, it's at the top. That's one of the better charts. I'd go, again, not a trade recommendation, but if I were issuing an alert, I would say 24.4 with a hard stop at 23 would be the correct way to trade this thing. So I'd wait for 2, because a big pullback here lately, so don't touch it now, but if it breaks 24 by a healthy amount, 24 3/8 of a stick, that's street talk. I don't know how many of you are old like me and remember back when there were fractions and 3/8 of a point. So I'd hit 24 3/8, or in our modern digital era, 24.4. 3/8 is 0.375. I used to be a statistician for the Ford Motor Company, so I'm in addition to being a UCLA grad and dual degrees, I'm a hardcore numbers guy. So I know my math, I know the numbers. That really helps me help you folks in making smart trading decisions. So anyway, you always solve the how to avoid false breakouts, but get in on the ones that actually run. That's what I do for a living. So 24.4. Smart question. Good question from Wendy. What if they don't pull back? I do lighter size. That brings up a good point. I think we're about out of time. I thought my Amazon device was supposed to do an alarm. Well, anyway, if it doesn't do what I want it to do, but it's still going up, I'll still trade it, but lighter share size. I'm always looking for the edge, right? I'm always looking for advantages as a trader. And if all the planets line up, then I go heavy size. But frequently you'll find that trade setups aren't, they're never, very seldom perfect. They're usually good enough. But if it doesn't meet all the criteria, for example, if the volume is light, or if the price action is tentative, or if it's just spiking up sharply, I'll fade back with smaller share size and then scale in if it does keep going up. So that's a good question. Let's see, PNR. Someone's asking about PNR. Yeah, that's a great chart. North of somewhere, I would wait. On this one, personally, I wouldn't trade it till it breaks 82 because the resistance is right slight. And again, this is a really, I'm glad you brought up this example because it shows exactly the truth of what I say. Had you bought 79 on the way up, you would not be a happy camper now. You'd be hanging on to the trade, but not thrilled with it. Again, if you buy right under a multiple of 10, that's a bad idea. So never buy 29, 39, 49, 59, 69, 79. If you'd bought 79, that wouldn't have ended well, right? So you wait instead for it to break at least $1 or so above the decade value. But yeah, good chart. Someone's asking, our time is up, friends, so I've got to wrap, but thank you so much for being here. A really big turnout. Yeah, Oracle looks great over 92, right? That's, if you're going to hold it for a few weeks, it's a good chart, yeah. I don't have any objection to Oracle. Buyers are there. Yeah, highly inflation, food. Yeah, we've got lots of things. Let's see, where do I look at the inverses? On any pivot, we had a bearish, who can tell me that candle pattern? And again, highlights the importance of learning how to trade with candlesticks, which I did for my colleague Steve Nissen. We've worked with each other for over 20 years now. So if you want to learn candles, because they're very healthy, very helpful and healthy to your trading account if you know how to use them, learn from Steve Nissen, and only Steve Nissen. Steve Nissen, spelled N-I-S-O-N, the world's top #1 foremost authority of candlestick charts. He's got a lot of copycat internet marketer competitors that screw things up and no doubt cost traders lots of money because they make up patterns that aren't valid and all that. Learn from Steve Nissen at www.candlecharts.com. I'm very loyal to Steve because what he taught me helps me make money, so it's good. Anyway, that's a bearish shooting starts that would tell you to do what? sell it all, Mortimer, if it loses support. You don't want to get back in until we break the, for a swing trade, I'm not going to get into this thing unless it breaks 30. Now I'll fish around for it on any bounce of support. Had a nice big high volume breakout on Monday, short-lived, and it crashed and burned back down here. So we want to get back in. Earliest would be above this candle. For swing traders, you want to get in over the 30. But for now, we leave the inverses alone because the market's trying to recover. And we get not quite a bullish hammer, the opposite, but a bullish lower shadow that confirms technical support at the blue 100 simple moving average line. So that would have told you to go long above the high of the candle there, right? With the protective stop at the low. And that's how you trade. The market leaves clues and it tells you how to trade it if you pay attention and you know how to combine the signals. And if you don't do it full time, it's very, very challenging. So that's why I have so many traders that work with me, because I do this full time and I do all the hard research for you guys so we can figure this thing out together. Right, evening start. Thanks, Eileen. Right. Tesla and Uber. Tesla, I wouldn't touch Tesla with a 10-foot pole. But Uber had a pretty good day Thursday, right? Tesla, nah, it's trying to climb up. 850 is major resistance. I called the top back here, by the way. Actually, I think I called it right there, and that sure enough, it was the top. Tesla, day trading, not swing trading. It's okay. Not my favorite chart. I'm not going to trade that myself. Uber's a nice recovery, right? It was back on Tuesday. It was the big up day. Maybe good for a pivot over the 58. I'm sorry, over the 28, and then again over the 50. Some good pin action lately in Uber. Nice swing move up. For now, the strategy that I'm going to use in Uber, and I mentioned it to my live room members successfully earlier last week, is day trade it only until it breaks 50. And then if it gets over the 50, then we can swing trade it. We don't want to buy this this high right under a decade value. All right. Well, friends, my time is at an end here. So I wanted to thank all of you so much for being here. And hope that I can be of service to you in helping you learn how to trade the ins and outs, especially of swing trading, as well as intraday trades in the live room. And we combine it. Most of the coverage, 60–70%, is intraday. Remember what I taught you this morning about intraday swing. Our final thought of the day is give some consideration to the intraday swing trading approach, where you buy right above the 2-day high, put a hard stop, no more than 40–50 cents, maybe $1 under support, and then let it ride all day long, and then close out the trade at the end of the day. And I'm the one person that can teach you how to do that, because I've been doing it for many, many years, so almost 2 decades now with that approach. So hope to see you in the live room, and I wanted to wish you all the best for a very profitable trading journey ahead, where it looks like the September sell-off was relatively brief-lived, at least for now. Evidence to the contrary, allow me to retort, would be what? Let's take one last look at a chart here, and then we'll wrap up. If you look at the 10-day chart of the S&P, you can see we had the big move down on the 20th. It ran all the way. That's Monday, Tuesday, Wednesday, Thursday, Friday. We're still in a technical downtrend unless we break over that 449, 450 level. So my expected play would be we may well get a gap and trap on Monday. We may get a move up. Futures are up. It's a green open, red close, right? Or green morning, red afternoon. So it'd be very, remember I said this next Saturday when we meet again, it'd be very unsurprising to me to see a false breakout Monday or Tuesday, and then a reversal back down into the muck. And so what you want to look for on this chart, X marks this spot. If you're long stocks, that would be a good place to sell them if we get down to that 440, 439. And if we start to fade back down, that will likely lead to a very sharp sell-off or a drop. So remember, we have all these economic headwinds with all the China big trouble in little China, or actually big trouble in really big China. They hate cryptocurrency, so they say we're banning cryptocurrency. That would likely not be good for the markets. And also that Evergrande multi-billion-dollar shockwave default possibility. So we got headwinds there. All over the place, we've got problems in the market. And September is historically a weak month. And we only have a week left, right? So only got 4 days left in this month coming up. But don't be surprised if the market either gaps down and runs down on Monday, or does a false breakout in the morning on Monday, then rolls down and sells off. And those are the kind of patterns that you need to look for as a professional trader. At least that's what I do. My living depends on it. So I need to make good trades and teach others how to do the same. And so one of the things that I think I can help you with once you join the live room is an extension of what I teach here, and much more detailed and much more specific, a lot more time for Q&A. I'm there usually 8:30 in the morning till 10:30 or 11. Last week I was there all day, at least a day or two. So I like to help traders out as much as possible to navigate the choppy waters that we're currently facing. So best wishes for success in your trades. I'll see you folks in the live room hopefully on Monday, and if not, then I'll see you on Saturday. So take care and trade smart. Let's go get them, and let's make the best of the current trade opportunities. We've got really good volatile markets. This is a trader's market, right? It was an investor's market. Buy the dip worked out great all year long, but now things are starting to, especially with the recent couple of weeks with the selling pressure, it gets tougher to trade from here on out. And I think it can really help you if you join my live room and try it. It's only $29 for a couple of weeks trial, or and you can get to it at trademastery.com/live and work with me, and I can help out. So take care. See you guys next time. Bye for now.